Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Friday, and we are now at the 24th of June, 2019, just after 4, let's call it around 4:15 p.m. Central Daylight Time. So we saw President Trump slap more tariffs on Iran. This time the head supreme leader got it. The prime minister is going to get it. People in the offices that are in these offices with these people are going to get it. There just isn't a lot more to sanction. That is the problem. They just keep tightening the screws. And of course the G20 is coming up, and as you can imagine, every head of the nation there, what do we do about what's going on between the U.S. and Iran? You're then going to get talk about what about energy prices. You're going to get ideas on trade, and that's the big elephant in the room. It isn't Iran and the U.S. The big elephant's going to be China and the U.S., and are they able to get their negotiators back to a real working table? From everything I saw in the press today, the negotiators have been talking. What they're not going to let on is what they're talking about. And what I'm betting is, as much as the Chinese say there's got to be a middle ground, I think the U.S. will not back off of what they think was agreed to on intellectual property, things of that nature. I think trade could be more up in the air. I mean, China's got new sources. What the heck? But as for stealing U.S. ideas and other people's, I think the whole world is behind that. It's got to be more of a level playing field, and I'll be very surprised if we end up with any deal that isn't as President Trump has said. So far, he's done everything he said, like it or not. So we look at the stock market. You're up to, for all purposes, record high area on a closing basis. You can see that. You didn't give much up at all. You can see how the market has had this phenomenal run on the daily bar chart. You're still in the pattern of higher lows, higher highs, until the market gets down and under 28.89 on this particular pattern. The market's over the 18-day average of closes, which the 18 is over the 100. The 100 is over the 200. You had one chance recently, just as we ended up May, at those averages, and it hasn't looked back since that point in time. Now, what we haven't been able to do recently, and it's sort of fascinating, is get up to the Bollinger Band. You did it back here, but you haven't been able to slip back in that at all, which is and get up to it, which is a sign to me of, as strong as the market is, it's not punch-through strength. It's just strong. It's very strong, and momentum is locked in. So everything on this chart is still bullish. You haven't hit the upper Bollinger Band? Okay, I've seen that before. But until you lose this reading with the red line under getting back under 80 on a closing basis, I contend that the pullbacks in this market are still going to be bought by the pros. They will bail if they lose that upside momentum, but it'll probably be an event that creates that. And the target could still be up near this 3,000 level. Now, the fact that the markets have been so strong in the first part of the year often leads to the second part of the year being strong also. I seriously doubt it's going to be anything like the first part. If you go back in history, I think if you're up 17% or something like that, you get about a 4% gain. These are different articles I've been reading. I do not know that research, but I read everything I can get my hands on. In the NASDAQ, trend is up. Unlike the S&P, you hit the Bollinger Bands, good resistance point. Pros probably taking something off the table and trying to come in on the brakes until you lose the slow stochastic. That is the strategy, I think, that is being employed. You've got a similar strategy going on with the Dow, but it's more like the S&P. After this one challenge of the upper Bollinger Band, hasn't been able to get up there again. It still has the embedded reading. Where you've got the weakness in the market is in the Russell. The Russell has stepped out of the uptrend for the time being. The markets are not even thinking of threatening, at least at this point in time, the all-time highs of this market. Support is back here at the 18-day average. It managed today to slice through the 100-day average, the 200, and take itself out of an uptrend. So with that taking place, the potential is here for the market to get back to that 18-day average and restructure. In the VIX, I still think the pros sold the puts when the market got down to the lower Bollinger Band. For regular readers, I've been saying that that's one of the features that I've been noticing as the market comes down. It's way easier to sell the put than it is to call, because when you're down to a reading of, say, 9, 10, 11, 12, it's harder to break on a percentage basis much lower, whereas to pop to the upside becomes very easy. These were surprises. It's rare to get those surprises at this low reading in these markets. So just my thoughts. And in looking at it, I always look at the closest of the moving averages, so I would not be surprised if the pros took the money off against the 100-day. I don't know if they'll hold for the 18 or not. In the T-bond market, we still have the pattern of higher lows, higher highs. Resistance to me is fairly clear at the upper Bollinger Band. You have divergence in this chart. Even though you've got the market going up, momentum is actually fallen to the downside. When I come to the 10-year note, it's the same. You've lost the embedded reading, which often leads to a play where price and the 18-day average try to come together. I'll still stay with what I know. Now, an idea that's going to happen would be taking out Friday's lows, because that 18-day average will be right under the market. In TLT, the market got up once here to the upper Bollinger Band. It did that prior in May. This is the first time it's done it in June, and it immediately got thrown back on Friday. A bit of a bounce from it today, but I call this more sideways action than trending action. The dollar index, for the first time today on this big break we've had, got to the lower Bollinger Band. It had missed it on Friday. It got to it today. So I think pros took some money off the table there. And the flip-flop of it will be true for me on the upside in the euro. So I see these markets as pulled a little bit too far, but that doesn't mean that you have a longer-term possibility of a trend up in this market and a trend down in the dollar. Right now you're at extremes. In the British pound, higher lows, higher highs. Momentum overbought. If it reaches, I wouldn't be surprised to get up to the 128.43 level and see some professionals start stepping out. To break the uptrend, you have to get under 128.90. What is this number? I want to be exact on it. 126.89. Again, my eyes aren't right yet. And as I look at that number, if you took it out, you'd have a higher high and lower low. So I think the bulls will defend their position at the 18-day average, but because the market is overbought, not as much support as it might otherwise have. In the yen, I'll stick with what, again, I tell you. First challenges of Bollinger Bands often, not always, often see the market react a bit to downside. You did that here. You found your support at the 18-day average. The market restructured, went to the upside. Bitcoin up $900 today. Now, if you're asking me why, I have no idea. Facebook's coming out with Libra, but Facebook's going to face a whole lot of scrutiny, be it from the Bank of England to our own regulators. It is another currency, and because they have such a large user base, unlike Bitcoin, which at the end of the day, it's not that many people that trade it, you start out with Facebook, you've brought attention. But that's good too, because it kicks up the coins that are out there already, and I think that's part of what's gotten behind the Bitcoin. On the energy market, look at how the spread differential between Brent and WTI has come in. It was up here at 9.25, now it's back down to the 696 level. Where's the resistance? If you knew no more, and what I tell you, that I think that the first time you get up to resistance areas like a 100-day in the upper Bollinger Band, that could be a resistance zone. Now it's the Bollinger Band, it's the closest, but it's still the 100-day if it slips through it. There's your Bollinger Band. And the market stopped at that rally. Again, I think the pros took some money off the table. When we come to WTI, same thing. You ran into that number, and the market saw somebody take some money up. That doesn't mean they're bearish. It doesn't mean you can't go higher. It's simply an area where people, I think, on the first challenge, take some action. What about Reebok gasoline? Right into the 100-day, the upper Bollinger Band. I realize there's people, it's going to run. It's going to run because of what's going on in Philadelphia, where we lost one of the U.S.'s East Coast, probably the largest refinery we have there, and they say parts of it are destroyed where I don't know where the gasoline's going to come from, but they'll have other ways to get it around. But you can see that kicked the market up and away you went. And that'll probably be in the news tonight, so read about that. In natural gas, you lost the embedded reading. So that puts into play for me the idea that price and the 18-day average are going to come together. I'd like to know what got that going. It must be warmer weather in the forecast after you've been down there. But as far as I'm concerned, that's a signal for those that have been bearish this market. That leg might be over. You have to re-embed right away tomorrow in order to prove that theory of mine wrong. That's quite a bit to ask the market to drop back from a 30 reading to get back under 20. It's going to be very, very difficult. So you put it all together, you come up with ideas, and that's one of the things that we're offering today. Technical trading tips from the top pros. This is not a new publication. This was from our good friends at Modern Trader, who I understand, and if you go on the website, I think they're trying to get something back and going, probably a new owner, which is great. But when we had worked with them, these were the different things that, the different parts of the content of this brochure. Gantt square of 9, what does it mean? Now here in this article is for the NASDAQ. Folks, it can be for any of the indices. It can be for any market actually. The benefits of relative strength. Well, how do you work with it? What does it do? You know, I use slow stochastics, which is another derivative of it. But they're all the same. They're always looking for momentum. Trading with money flow index. How does that work? What is money flow? You'll see. Rules for bottom fishers. You know you're out there. You know that you can't stand the fact that the market's falling. You're going to catch that turning point. Sure you are. And of course, optimizing stops. Well, it's all in this brochure. It's great little articles that they've put together. As you'll see here in a second, this is how they look. So there's graphic examples of everything. We've put this and other brochures, not just from them, but from others, in our futures trading kit. Give them all the credit in the world. It's their magazines, their articles. But we selectively pick what we think will be in your best interest. How do you get it? Give us a call. You can go to our website. You'll see this offered, or our futures trading kit. It's in there. You can click up here. If you're watching us on YouTube, hit the icon, take you right to our homepage. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.